Gold has recently hit yet another all-time high. It has even managed to outperform the S&P 500 over the past few years. But what is driving up the price of gold? And with gold prices now at record highs, is it still a good time to buy gold? Before I start, full disclosure, this video is produced in collaboration with OCBC. But rest assured that all views here are entirely my own, and everything that I say here are my own honest opinion. First up, let's start with the basics. Why does gold even have value in the first place? Whether it's in 2450 BC in ancient Egypt, where people were using gold as a medium of exchange. From around the 1st century BC up to the 4th century AD, the Romans transacted in gold coins known as aureus. The 1800s, where there was a gold rush in California. Then from the 1870s all the way to 1971, where gold was used to back the international monetary system in something called the gold standard. And even now, investors are using gold as a safe haven to preserve the value of money. Didn't Warren Buffett say that gold has no utility? It doesn't produce anything and it won't do anything except to look at you? If you search online, you will always get the same few answers that are vague. Gold is rare, it is difficult to extract, it is pretty to look at. Gold is malleable and you can use it in many different things. All of which still doesn't answer the question of why gold was chosen and not some other stuff like McDonald's Hello Kitty toy. It sure is pretty to look at. People like it and it is rare enough, I guess. I didn't understand that until I saw this. There will be only this much gold in the world, with around 201,000 tons being mined and another 53,000 tons left to be mined. So when you have a limited supply and a high demand, that's what makes gold have value. But then, what is driving this demand? In short, it is the fear of uncertainty. You see, throughout history, humans have tried to use different currencies as their medium of exchange. However, according to a study by Dollar Days, they found that throughout history, there isn't any fiat currency that has succeeded in holding its value. Out of the 775 fiat that were looked at, 20% failed through hyperinflation, 21% were destroyed by war, 12% destroyed by independence, 24% were monetarily reformed, and 23% are still in circulation, approaching one of the other outcomes. And throughout it all, gold has managed to keep its value in pace with inflation. That's why people call gold a store of value. In contrast, from 1913 till now, the US dollar has lost almost 98% of its purchasing power, thanks to inflation and money printing. For example, in 2008 and in 2020, where the US Fed was printing trillions of dollars in order to help prop up the economy. Now, perhaps this time it is different, and with the US dollar being the world's largest reserve currency, it might just be around forever. But with the rising number of geopolitical tensions, central banks all around the world have started to buy more gold in order to diversify their risk. For example, ever since the start of the Russian-Ukraine war in 2022, many countries such as China have been dumping their US holdings while buying a ton of gold. Actually, it's not just China who has been buying more gold. Many central banks have also been buying more gold in the recent 2 years as compared to the past 10 years, such as India, Poland, and yes, even Singapore. This is because physical gold carries no credit or counterparty risk. This is unlike financial assets like bonds, stocks, or bank deposits. Physical gold is a tangible asset that does not rely on any third party to fulfill a promise or obligation. This makes gold one of the most crucial reserve assets worldwide. So this is the biggest reason as to why gold prices have been going up recently. Geopolitical tensions all around the world are rising, and central banks are buying gold in order to diversify their holdings. Besides that, the other reason why gold prices have been going up is because gold typically becomes more attractive in a lower interest rate environment. The reason for this is simple. When interest rates are high, investors prefer to park their money in interest-bearing assets to earn a higher return, such as bank deposits, government treasury bonds, and money market funds. But when interest rates come down, there are less opportunity costs of holding those assets, which makes gold more appealing to hold. Historically, gold prices have gone up 7 to 8% on average within 6 to 12 months after the first rate cut, with some analysts even going so far as to forecast gold prices hitting $3,000 by mid-2025, which represents another 15% upside from current levels. Will that come true? We will just have to wait and see, yeah? So, should you invest in gold? Sure, gold has done better than the stock markets in recent years. But this is just cherry-picking data at its finest, because you can always pick specific time periods to show that gold is outperforming the stock market, like from the 2000 dot-com bubble till now, 2018 till now, and so on. But over the long term, it is quite clear that the stock market has given higher annualized returns compared to gold. So then, why would one invest in gold? Personally, I see gold not as an investment to get rich, but rather it's an investment to diversify your portfolio. That's because gold typically has low correlation to other asset classes, especially stocks. And if you look at history, during times when the S&P 500 was crashing hard, gold has given an average return of 6.5%. This is also the reason why many people call gold a safe haven, as it can help to diversify investors' portfolio and hedge against times of uncertainty. Though, don't expect gold to always do well either, because returns are not always guaranteed. For example, when the market crashed by over 27% in the 1980s, gold crashed even harder. And during inflationary periods, there are times when gold gave positive returns, other times negative returns. Also, while analysts are optimistic on gold in 2024, this strong momentum can result in gold prices running too far ahead, resulting in a pullback over the short to medium term. So, if you are planning to invest in gold just to ride the wave up over the short term, it won't be an effective hedge. Instead, you will need to hold it for much longer in order to benefit from it. But don't go and all in on gold, yeah? The keyword here is diversify, with experts recommending having anywhere between 5 to 10% of your portfolio in gold. So then, if you are interested in investing in gold, how should you do it? If you are someone who's a little paranoid about the global financial system, the best way is to directly own physical gold. This could be useful in the event of a financial crisis or market disruptions. You won't have to depend on any party to liquidate your gold. However, owning physical gold won't be cheap, as you will need to first have enough money to buy the physical gold itself. After that, you will need to continuously pay for storage costs to keep your gold safe. If you don't want to deal with all that, and you just want to gain exposure to the price movements of gold, the other way is to just buy gold ETFs, such as GLD and IAU, which charge a low expense ratio of 0.4% and 0.25% respectively. Otherwise, another good alternative is to buy it through OCBC Precious Metals accounts. The benefit of these accounts is that you can start investing in gold with as little as 0.01 ounces of gold and silver, or less than 40 SGD as of making this video. And since it is paper gold or metal, you won't have to worry about storage. So there's no ongoing custody or storage fees. You get to invest in it 24/7 anytime you want via the OCBC app in just a few simple taps. Plus, you also get the flexibility to buy and sell the precious metals via SGD or foreign currencies available in your global savings accounts, which is pretty convenient, yeah? So, if you are interested, from now to 31st December 2024, investors will get to enjoy up to $908 cash rewards on selected investment and insurance products, including gold and silver, FX, and Great Term Guard to help you stay both invested and protected. For more details, do check out the link in the description down below. Anyway, that's all for this video. Hopefully, you found it useful. Like, share, and subscribe, as I'll be posting new videos every Monday, Wednesday, and Friday.